Good morning, traders, and welcome to Phoenix Blues Morning Update. My name is Nishal Patel, and today is Thursday, the 17th of August. For many of our regular listeners, I would just like to say welcome back. Thank you very much for being patient. We've been off for our annual leave in the summer holidays, as many of you already know, but we're back to regular scheduling of the morning updates. And having a quick look at the major news announcements for today, we've already had employment data coming out from Australia. Employment change was actually positive, and the unemployment rate was static and stayed static from its previous reading, which was from last month. And we do have retail sales coming out on cable, which we will also have a quick look at that chart, and the fortnightly unemployment claims. So employment data again coming out from stateside. Moving swiftly onto our charts. First chart we'll have a quick look at is the dollar index. Dollar index right now currently floating at 93.34, which is around the average closing and opening price of the last few days in the course of this week. So haven't seen too much of a change. Have seen a break above 94 that we saw the day before yesterday, and then we saw a retreat in that off the back of it. But have it moving on forward, and I would say that's primarily been down to the slide on the euro. But if we move over to the Australian chart first, we can see what that employment data has really done to help propel the Australian dollar versus the greenback. Right now floating at 79.55, so just above 79.50. We can see that positive employment data really helping the Australian dollar here. Some of our traders have already taken a long position on this from the day before yesterday, so off the Tuesday night, and we've seen a very strong push over the course of yesterday and a good start this morning. Moving on forward, having a look at cable right now. Negative data coming out on the sterling. We saw inflation data come out earlier on this week, and we also saw average earnings, which has obviously shown a squeeze on the consumers here in the UK, with inflation rising and average earnings taking a slight dip. So we're seeing that disparity between the earnings and inflation as prices rises and wages stay the same or slightly falling in some industries. So the squeeze being pushed onto the average consumer here in the UK. Obviously, we do have retail sales out, which is a monthly data reading coming out at 9:30 British summer time, which may give a slight respite to sterling. But that being said, with consumers spending a lot less than they have been this point last year, it may not look too positive on the side of the sterling. That being said, we have been looking for a bounce off the 618, which is a weekly fib level that we see just above 28.50, and we've seen that. We saw price action come down, hammer off it. FOMC never dragged it past that 618 at around the 28.50, 28.60 area, and price action, as we saw, opening up today on the confluence of the 100 and 200 day exponential moving average, opening up off that point and then driving up to 1.29, currently just floating below 129, so around 20 pips shy of the 1.29 level. Probably won't see too much action today long off that area. Would like to see a rally, but with the data coming out at 9:30, I think it's going to be dependent on that, and then maybe looking for potential trades on the American Open. Moving on to the euro right now, as we can see here on this chart, we see again euro very much like cable, coming off and bouncing off, and we see it resting off this 20-day moving average on this daily time frame, currently floating at 1.1745, so just below 1750 right now, opening up fairly strong, and then taking a slight dip off the European Open, and we never saw too much success off the Asian session. Moving on to some of our commodities. As many of you have probably already guessed, most people are selling on the rallies on WTI right now, and having, off the back of last week, having hit that key $50 mark per barrel, crude has come tumbling back down off the oversupply in many cases, and the over withdrawal on inventories. So we've had a couple of pieces of data over the last couple of weeks that haven't helped the price of WTI or even Brent in that respect. Now, as always, if you'd like further information on how we capitalize on the markets and how we can look to improve your own trading, feel free to get in touch with us at info@phoenixblue.co.uk. Alternatively, visit our website or any of our social media platforms, and we will be happy to help. Until next time, traders, happy trading. Goodbye.